How do I figure out whether enough taxes were withheld or paid on a retirement account distribution after someone dies? The cleanest way is to reconcile the distribution paperwork, usually Form 1099-R, to the exact tax return that must report that income, and then compare the withholding shown on the form to the total tax due on that return. Start by identifying who actually received the distribution, because that determines whose return reports it and who gets credit for the withholding. Look at the payee name and tax identification number on the Form 1099-R. If it shows the estate's employer identification number, the income and withholding usually go on the estate's fiduciary income tax return. If it shows a beneficiary's Social Security number, it is usually the beneficiary's income and the beneficiary claims the withholding. If it shows the decedent's Social Security number and the payment was made before death, it generally belongs on the decedent's final individual return. Next, confirm what was withheld by reviewing the Form 1099-R boxes for federal withholding and any state withholding, and match those numbers to the return for the year the distribution was paid. Then compare the total withholding and any estimated payments to the total tax due on that return. If withholding is short, the accountant may recommend an estimated payment or adjusting withholding on later distributions, if any. If withholding is more than needed, the return may produce a refund. One common pitfall is trying to use withholding on the wrong taxpayer's return. The payee and tax identification number on the Form 1099-R usually control who gets the credit. Another pitfall is confusing a taxable cash distribution with a properly handled post-death transfer that may not be currently taxable, which can make the withholding look wrong when the real issue is how it should be reported.